Hello everyone, welcome back. Welcome to FX Bit of Influence Argo Recording. My name is JD. Today's topic is about manipulation and time frame strength for direction. If you can finish or these slides we have here, as you can see them, you will go with enough skills that you need to determine direction of the market. So make sure you watch from the beginning to the end, because this is a skill that you need. This is very heavy, so make sure you go with this kind of luggage that I have prepared for you. So without wasting time, let's dive in. Okay gangs, manipulation and the time frame strength mastery, it's what we are going to focus on. And we'll discuss about what is time frame strength. And of course, we talk about candlestick warfare. Secondly, we'll talk about manipulation and liquidity. And then we'll talk about, inside the manipulation and liquidity, we'll talk about FU, anti-FU for smart direction. We'll talk about HCS in the game. We'll talk about Calvary Week liquidity. Then we talk about last area of liquidity. Then we focus more on Euro USD analysis. Make sure this section, make sure you don't miss this section, because this is where we see practical skills, right? That's where we apply what we have learned. So then I will talk a little bit about the art of entering as it forms. It's gonna be a longer video, but sit and relax, take a pen and paper, and follow carefully. So what is time frame strength? Time frame strength is the battle of price action between buying and selling pressure on the same degree of time. This means we cannot start the battle of buying and selling pressure using different degree of time, unless we apply HCS technique, which will be discussed a little bit later. In our price reading mastery, this war between bulls and bears is called candlestick warfare, and the degree of time is what we call time frame strength. Hope you understand, guys, what I'm trying to mean here. The battle between candlestick, we can call it candlestick warfare, but we do it on same degree of time. So if you are studying or if you are doing analysis and you are trying to study candlestick warfare on a certain time frame, stay on the same time frame. Candlestick warfare, the term simply means the fight between bullish and bearish candles using the same degree of time or same time frame. The key here is same time frame. Don't forget that. By same degree of time means a dominant pressure that formed on a particular time frame must be negated by another opposing pressure on the same time frame, unless we apply HCS. HCS stands for high confluence setup and will be discussed a little bit later. It's not the main topic of today. Here we have a bearish move that was created around here. You can see that bearish candle engulfed the bearish candle engulfed the bullish candle. There is a mistake here. This is supposed to be a bullish candle. A bearish candle engulfed a bullish candle, right? So this is a bullish candle. Then we have a bearish candle that engulfed the bullish candle. Hope you can see that. Try to understand what I'm trying to show you guys. Here to the downside, bearish pressure will remain dominant until a negation forms. So as long as bearish pressure is identified, so we will stay bearish until this is negated, until we see a movement against this one. Okay, I'm just giving you a small introduction, guys. We haven't yet started, right? Now, if you see a bearish dominance like this, according to the rule of time frame strength, bias remains bearish until bullish dominance against current one is generated on the same time frame. If you see a bearish dominance like this, according to the rule of time frame strength, bias remains bearish until bullish dominance against current one is generated on the same time frame. This is the key to understand this. On the same time frame. If you understand this, you are going to succeed in this course. Sorry, guys. Now, look at here. Here we have got a bearish dominance forming. We keep being bearish on the same time frame until this move is negated. It is negated here. Once we see this negation, now we know price going higher, right? So bullish dominance is generated. The direction is bullish. Bearish one is terminated, is negated. Hope you understand. However, there is something very important here. We do not use engulfing candles to determine direction. Remember one more time. We do not use engulfing candles to determine direction. I'm just here using engulfing candles just to give you an idea, right? This is a baby step of way of teaching you so that you fully grasp the concept. I'm just using engulfing candles, the concept of engulfing candles, to help you understand the definition of what you call time frame strength. Time frame strength. In a time of strength, this means in time frame strength, 1 hour candle cannot compete with daily candle or 4 hour candle. This is what we mean by time frame strength, right? This, you must analyze the candlesticks on the same degree of time. If you have seen a bearish move dominating the market on a monthly time frame, you cannot go against it on a daily or weekly. Hope you understand that. That's what we mean staying on the same degree of a time frame. Hope you understand that. Take a pen and paper because you are going to say something. So understand this. Price dominance you see on a monthly time frame must be negated on a monthly time frame. Hope you understand. There's something missing. Time frame here. Price dominance you see on a monthly time frame must be negated on a monthly time frame. If it is not negated, keep the same direction. Do the same in all time frames. Existing yearly time frame dominance, this is a second example. An existing yearly time frame dominance must be negated by another yearly opposing dominance. This means if you see a pressure forming on a yearly time frame, you must keep that direction until you see another one on the same yearly time frame that goes against it. That goes against it. I hope you understand this. If daily bullish dominance, I'm just giving you an example. I'm trying to explain this. I'm trying to emphasize this concept. If daily bullish dominance was identified, it must be negated by the same daily bearish dominance. If you see bearish dominance going on, it must be negated by another. If you see a bullish dominance forming, it must be negated by another bearish dominance on the same time frame. This case on the daily. Hope you truly understand this. Now let's do the real stuff. Let's talk a bit about manipulation. When we talk about manipulation, we simply mean how strong people behind everything you see on the screen, including those who brought COVID-19, I hope you understand what I mean, guys, and the likes, manipulate price for their own benefits. Whether you accept or not, they are there and they are near you. Yeah, that's the fact. Good thing is that candlesticks do not lie. We track their footprints and we cling on their tails and we make ends meet. The candlestick you see is a visual representation of what is going on in the marketplace, including your action and mine within a particular period of time. Always time. I'm talking about time. Don't forget that. Time. Right? Time. Hope you get the idea. Then let's dive deep now. So what is FU and untapped FU for smart direction? First of all, what is FU and untapped FU? Because most of you tend to ask that. FU is nothing, just simple terminologies that people invent, but we will see in real action what is it. FU candle simply means FK. Hope you can read this if you know English. I don't want to speak it. Simply means FKU candle that manipulates and reverses to close below the low or above the high of the previous candle. For example, this is candle number 1. Candle number 2 manipulates purge liquidity. You can see it goes there to purge liquidity around here, then reverses and closes below the low of the previous candle, below the first candle, right? If you see a body closing below this area, now you've got a successful FU. Hope this is clear and understandable. Now, what is untapped FU? Simply means an ATT FU. Means simply untapped FU. Untapped. So untapped comes from here. Thank you, candle. If I can say that manipulates, but it fails to close below the low or above the high of the previous candle. So this candle number 1, this candle number 2. Candle number 1 went here to purge liquidity. And I say that it went higher to purge liquidity, but it failed to close below the low of the first candle. So it was attempting to be an FU, right? But it failed to do so, right? Hope you are understanding, because you are going to need this very soon. I don't mean very soon in this analysis you are going to do, even in your trading, right? So if I can say, in the bearish scenario, this is a bearish FU pattern, and this is a bearish untapped FU. Hope you can see. This is a bearish FU. This is a bearish untapped FU. This is a bullish FU. This is a bullish untapped FU. Hope you understand that this has a strong meaning, as you are going to see on the Euro USD. You are going to see that. We are going to see that. I'm sure once you finish this video, you will be wondering, wow, you will say, wow. I know. Let's go on, guys. FU and anti-FU for smart direction. Now that you have understood what FU and the anti-FU are, let's go ahead and apply time frame strength. The rule says, do not forget this rule. The rule says manipulation. When I say manipulation, understand FU and activity FU. FU and activity FU, you see manipulation you see on a certain time frame shows true direction of the market until it is negated on the same time frame. On the same time frame. If it is negated, direction has changed. If it is negated, direction has changed. Manipulation you see on a certain time frame, whether you see it on a daily, monthly or weekly, yearly, shows the true direction of the market until it is negated on the same time frame. If it is negated, the direction has changed. Hope you understand. And I always recommend a higher time frame. Now, assume this is a certain time frame, whether it's monthly or weekly. I'm just giving you an idea. So, if you was created here, once we see this, we know direction will continue to be bearish, especially on a high time frame, until we see another FU that goes against it, or another manipulation that goes against it. In this case, you have an activity FU. So once we see this, we know direction has changed, unless this also is negated and you continue to go down, right? Unless this one is negated again, but we keep believing that we are going higher. Don't forget that. Do not forget that. The key is to stay on the same time frame and see it as it forms. The other way, which is more difficult and is out of the scope of this teaching, is the use of HCS. HCS. So, HCS stands for High Confluence Setup, and it is the concept of studying a candle on lesser time frame, usually divided in half. If the current and previous, pay attention, if the current candle and the previous one produced two manipulations, they can outperform a manipulation on another time frame. They can outperform a manipulation on another time frame. On another time frame. What does it mean? On this picture, price went higher without negation. This is usually forms when HCS was formed on lesser time frame. For example, you have FU was formed, we believe we are bearish, and here we believe we are bearish, but later we see price immediately reversed without creating what? Manipulation. Why is that happening? Most of the time, this candle, remember we are on a 13-minute time frame. Take this candle and divide it by 2. You get a candle. You get two 15-minute candle, 15-minute candle, and you see it has created what? A manipulation like this. This one on a 15-minute, and again this one created the same thing on a 15-minute. So this is what we call HCS. HCS is a double manipulation on our time frame. So if these two manipulation in 15 minutes join forces, if they can gather, if they can connect, if you connect them together, they can outperform this 30-minute FU. So it's something difficult, and it's out of this teaching, guys. That's something I say we are not going to discuss right now, right? Focus on what we are going to talk about today. So, what is Calvary week liquidity? This is a gift I'm giving you. What is Calvary week liquidity? If you remember Jesus on the cross, you understand what Calvary means, Golgotha. So why do we call this a liquidity? When studying candle-to-candle manipulation warfare, you will usually find a liquidity that has faced the last judgment. The last judgment, right? You will usually find a liquidity that has faced the last judgment and is ready to be crucified. And is ready to be crucified, right? This liquidity is called Calvary weak liquidity, and it becomes sweet if it's found on a higher time frame. On a higher time frame. If you see it, don't miss it, right? I will show you that. Calvary weak liquidity should be targeted first before the last draw on liquidity is formed. This liquidity is sweet when untapped FU was generated. This liquidity is very sweet when untapped FU was generated. Right? Hope you understand why we call it Calvary weak liquidity. It's ready to be put on the cross, right? It cannot survive, it must be taken. It has faced the last judgment. It's waiting for what? For being nailed, right? To be nailed on the cross, right? So, hope you understand what I mean. So with that in mind, allow me to introduce you to the two important liquidities we will be targeting. So understand that high and low are liquidities. There's some people who don't understand this. Always remember every candlestick has liquidity on both sides, only it's high and low. For example, if you have a candlestick like this, it has a high and low. There is liquidity here, there is liquidity here. Understand that. For example, these two candles are different. So assume that this is a longer candle. Then this one has grabbed the liquidity around here. Then another one is here. This one did not grab anything, is high liquidity. Right? So you understand. Because liquidity is still virgin, right? So every candle has liquidity on both sides. If manipulation was generated, especially untapped FU, a candle that was purged has liquidity on the other side. I repeat one more time. If manipulation was generated, especially untapped FU, a candle that was purged has liquidity on the other side. I'll give you an example. This means if a high is purged, the low becomes the last area of liquidity to be taken. Remember, we are talking about candle-to-candle manipulation warfare. So when I say last area of liquidity, there are different ways to see that. But in terms of candle-to-candle manipulation, it's the opposing side that was not manipulated. Right? I have told you a candlestick has what? Has liquidity on both sides. So if this high is manipulated, this high is purged, right, by this candle. So the liquidity here is taken. So we still have another one resting below. So we need to see price coming to take this one. This is what you mean. Every candlestick has liquidity on both sides. So this one is taken. This one is still here. So we need to see it taken. So this is the last area of liquidity when we are doing what? Candle-to-candle manipulation warfare. When we are studying candle-to-candle manipulation warfare. Hope you understand. So last area of liquidity based on the candle-to-candle manipulation warfare. You understand? Until the FU is formed, we now know, according to time frame strength, we can only look for buy opportunity when this liquidity is done being dusted, right? When this liquidity is taken, right? Hope you get it. Now, so once you see this pattern, you are going to see this kind of forming. For example, coming back to test this until the FU. That is a normal thing you are going to see until the FU being tested. You are going to see something like this. After testing, this one is going to drop to take out last area of liquidity of this candle, because a candle has liquidity on both sides. Hope you understand. Hope you understand that. Now, what is candle value week liquidity? While last area of liquidity is found on a candlestick that was purged, follow carefully. While last area of liquidity is found on a candlestick that was purged, while last area of liquidity is found on a candlestick that was purged. This is the one that was purged. It was purged here. Last area of liquidity is here. Candle value week liquidity is found on the wick of unempty FU towards generated direction. Where is generated direction? Direction is to go down, for example. So a purge is here. So the wick of that unempty FU is what you call candle value week liquidity. Candle value week liquidity. This wick you see here is what you call candle value week liquidity. While last area of liquidity is found on a candlestick that was purged, while last area of liquidity is found, last area of liquidity is found on this candlestick because it was purged here, candle value week liquidity is only found on the wick of unempty FU toward this direction. Until FU is here. Until FU is here. This is the total FU, the purged direction. Where is direction? Toward this direction, the downside. So the wick is here. If it is the upside, you understand. You do the, it's vice versa, right? Hope you understand that. Hope you understand that. Toward this what? Direction. Direction is downside. Guys, even if this candle is pushing higher, it will reject and go down. So this liquidity is your first liquidity that was first the last judgment. It must be taken, right? So never miss it, especially on a high time frame. Assuming that this is monthly time frame or 6 month time frame, it's going to drop like 600 pips, right? Until we reach this area. Until we reach this area. Maybe you have no idea why I'm saying this, but this is your candle value liquidity. So when a new candle starts, that will be a quickest liquidity to target. It's doomed to be crucified on candle value mountain. Hope you understand. So this is important to know, because instead of seeing this, of course this is candle value. Instead of seeing this, it's candle value week. Instead of seeing this, you may see something like this. Have you seen it, guys? Guys, have you seen that? Instead of seeing this, you can see something like this. And to the FU, to downside, last area of liquidity is here. Candle value liquidity is here. Market goes down because this is doomed to be crucified. It cannot escape. It is purged to downside. Remember, candlestick has liquidity on both sides. This one also has liquidity here and it also has liquidity here. So if this is purged, it's a liquidity that is being taken, right? Right? It's a liquidity that is being taken. Every candlestick has liquidity on both sides. right? This one also, this anti-FU will have liquidity on the top and the bottom. So if direction is to the downside, market has permission to take this liquidity and leave this one behind. That's how you say liquidity was left behind. Sometimes we are talking about this concept. So current weak liquidity taken, market reverse creating a strong FU to the upside, negating this one. So there are people who tend to ask me, what is a negation? Negation is something simple. Negation is any manipulation that goes against another one. So if you have a bearish manipulation, and then we see another one which is bullish, so this bullish one is negating a bearish one. It's a manipulation that goes against a previous one. Hope it's clear, guys. Now, let's apply this concept on Euro USD. So let's now decode Euro USD using the knowledge we have taught or we have seen to show you how to determine the direction using a time frame strength and manipulation. The analysis we show is all about being the buyers. There are more needed to be mastered by, but I hope God is going to open your eyes to help you see the treasure hidden in this video. Honestly, what I'm showing you guys is to show you how to determine the direction. There are more stuffs you need to understand, but at least I want you to master direction. How to determine the direction, how you can determine the direction using time frame strength and manipulation. So Euro USD 12 month. Look at this. This is a yearly time frame. This is a yearly time frame. Every candlestick here takes 1 year to complete. This is a screenshot from Euro USD. Right, from since 2011. This is 2011. This is 2010. This candle is 2010. This is 2011. Right. Now, this is anti-FU that was generated. Now, after this anti-FU was generated, which is this one. Calvary weak liquidity is easy to see, which is this area. Calvary weak liquidity. Last area of liquidity using a candle to candle manipulation is visible, which is this area. So what is since 2011 it crossed with manipulation to the downside. Since 2011, this candle closed with manipulation to the downside. We start year 2012 with a bearish direction targeting Calvary weak liquidity and then the last area of liquidity. So what does it mean? Because this candle closed as anti-FU, it has given us direction that we are going to downside. Remember, manipulation and the time frame strength for direction, right? So we have got a signal that next year, for example, assuming this is a current year, we have got a signal that a coming year is going to be a bearish one. So there is no reason to start buying, never. So instead, you start a new year. With which is 2012 with a bearish direction to take out this liquidity, trade on a certain more liquidity here, and overall hitting this area. So you are starting the new year with a bias. So first target is Calvary liquidity, Calvary weak liquidity, as it is the quickest liquidity market can grab and create a negation, going against the current anti-FU, leaving behind the last area of liquidity. You have seen that here. I've told you this can happen. It may take this liquidity and make a reversal, then it goes higher. Hope you understand. Negating existing liquidity. This is what I'm trying to tell you guys. The same here. it may take this liquidity. It may take this liquidity and then negate this one. This one gets negate. This means it may take this one and you get the manipulation to the upside. Then that time we know market is gonna go higher to take out this one. Okay. Remember, you go candle to candle, right? Let's see what is going on. Have you seen? Try to see when year 22 open it, trade higher, then it went down. Look, this drop to clean out this Calvary weak liquidity. Instead of grabbing last area of liquidity, market rejected, manipulating to the upside. Manipulating to the upside. Have you seen? So this is another anti-opportunity FU against this one. So this means this anti-opportunity FU is negating this one. It's because it is going against this one. The mission of this one was to grab this liquidity. Now this one denies, right? Hope you understand what I mean. So try to see how year 2012 opened and dropped to grab Calvary weak liquidity and immediately reversed. As informed trader, you would start with a true direction and capitalize on that downtrend. Those are more than 1,400 pips or 1,400 pips. You can day trade, but with smart bias in mind. The purpose of showing you this, it doesn't mean you are going to trade to hold for a year. No. The power is to understand where market is going. Whether you are going to trade a daily candle or a weekly candle or 4-hour candle, you are doing that with direction in mind. This is the focus. This is not related to how to make entries, guys. I'm showing you how to determine direction using higher time frame, right? Because there are more concepts about entry models, cycles, whatever we discuss in mentorship. But the power of this is to show you how to identify direction, right? So that you can trade with smart bias in your mind. Hope you understand. Hope you understand this. Now, try to look at how year 2012 started with bearish bias. So remember, you open the chart, the new year is starting, you have already got direction that you are going to go down. So you are starting with what? With a bearish direction in mind. So you know this move is going to create a high of the year because you don't know if market will reject as of now. So you take this level as the high of the year because you know you are bearish, right? And then you are capitalizing on the movement. You understand, you know you are bearish on a higher time frame. You know the direction. This is the power of understanding this. Remember, this chart is on weekly. This is a weekly time frame. This is a yearly. This is a weekly time frame of this yearly candle. Hope you can see the power behind this. Hope you guys can see the power behind this. How to determine the direction. Right? We are still going. Follow carefully. Now, you may ask yourself, year opened, grab the liquidity and try to go higher. How do we know it will go down and how do we know it's likely to reject and reverses? The answer is there is another concept about that, but it's beyond the scope of this video as of now, honestly. Because you can add cycles, you can add whatever to determine whether we are going to have this pullback, right? Or whether you are going to have a reversal, right? Hope you understand that. Back to this. Now, year 2012 closed with anti FU to the upside, negating our bearish manipulation. You can see this. Negation here. This is a negation, anti-FU negating. Remember, this was a manipulation to the downside, then it is negated here. Where is our Calvary week liquidity? Our Calvary week liquidity is now here. If you can see that. We mark our two important liquidities, Calvary week liquidity and the last area of liquidity. We start a following year, which is 2013, with bullish bias. Calvary week liquidity being the quickest to be killed, right? Because it was doomed to be crucified. That's what we call it this way. So once it is taken, again we repeat the same process. Once it is taken, market may continue to grab this last area of liquidity, or this manipulation may hold. Then instead of seeing price going higher, we can see another negation again. Negating this negation. Hope you understand. A new manipulation going against this uncertainty FU. With that, when we see that, we know that now market is trying to target this one, because all of these are liquidities. This one is showing signs of holding. We want to see if this one fails or if this one holds and this one gets defeated. Hope you can see that. Now, try to see what took place. As you can see on the right side, year 2013 opened and traded higher and grabbed Calvary week liquidity and closed bullish without manipulation. Look at this. This was 2012. A new candle started here, which is this one. Look at how it traded higher. It created the low of the year, testing this level, then went higher to grab what? That liquidity. Can you see that? Then it closed with a clear bullish move. So there is no manipulation here, right? We are still bullish. Right? We are still bullish. We are still bullish because there is no manipulation that was formed here. We start a new year with bullish in mind. Hope you can understand what I'm trying to show you. But here, this is how it all forms. Look, a retro move, of course, trade on this liquidity. Again, another push. See that? Year closed with a bullish move, right? These are over 150. 1,151 pips of the move. Your job is not what? Your job is not to hold for a whole year. So bullish bias as confirmed by manipulation, as confirmed by this manipulation, we start the year with bullish move, as you can see it here, as confirmed by this manipulation. Then you do not have to hold for a whole year. 2 trade or 1 trade a week is enough, but a trade you truly understand, right? A trade you truly understand. What I'm trying to tell you, you can look for buy opportunity here, maybe get out of here because you understand what is going on. You can, maybe you have range structure going on here. Those who understand the range structure going on here, you can take a move, you understand, and you go out. When the reversal forming and you see sign of reversal to come back to this range, you can look for sell opportunity into internal range liquidity because you understand what is going on, and then you look for another buy opportunity towards this drawn liquidity in this time frame because you understand what is going on, because you have direction in mind, right? This is the power of understanding that. Now, so before you continue, guys, let me remind you something. We are still continuing, guys, but I want you to remind you this. This skill took years to master, and it took me 3 days to give you this crash course. This video has taken me 3 days to prepare, And I guess it can take you 5 seconds to subscribe to this channel and 1 minute to follow us on Telegram, X, and Instagram. So this is my Telegram channel. This is my personal Telegram to anyone who can message me. This is our Twitter. This is which is X. This is our Instagram. Please go there and follow us. Pause the video, go there and follow us. All the links are in video description. Follow us in our channel, Telegram channel, on Twitter, Instagram. Remember to subscribe and then come back and we continue the video. Hope you did that. Now, we have got this candle closing higher. We have got this candle closing higher. So what are we going to do now? Since the price closed bullish, we want to do 2 things. We start with bullish buyers to target the last area of liquidity. So we start with bullish buyers to target this area, right? Or we start with bullish buyers seeing short-term buy setups and pay attention to see if the current high will be purged. Most of the time, if this one is going to hold, this one will be purged, right? Or if a new candle closes here, for example, again, but this one is going to hold. At the end, we will see a candle that is purging this one, creating a purge, manipulation to the downside, and then we start selling all the way down, right? So there is a way to know if a purge is forming, right? Especially when price has traded higher. For example, if price traded higher, there is a way to know if a purge is forming or not, right? So that is the key, but it's not part of this video, right? So this time we are talking about direction, right? We start bullish buyers seeing short-term buy setups and pay attention to see if the current high will be purged. If confused here about what will happen, stay risk off, right? Don't trade. Stay risk off. I mean, don't take risk, right? For me, I would study every monthly candle to detect changes based on other candles on the left. That's my approach, right? Now, as you can see now, price traded higher, taking all the high, and then it purged, creating a strong FU to the downside. Hope you can see that. So perfect manipulation took place, generating a FU candle. We have beautiful liquidities below waiting to be crucified. We start another year with a bearish direction. Price will continue to be bearish until we find another manipulation against this one. This means until we find a bullish manipulation. So we continue to be bearish until we find another one that goes against it, right? So this time direction is bearish. Remember, this is a yearly time frame. You will be seeing it. You will see it on a yearly time frame. On a yearly time, it will start forming in your own eyes, and you will see that because it is a higher time frame. That's the beauty. That's the beauty of working with higher time frame first. Starting to analyze the chart from higher time frame. We keep having bearish bias. No manipulation is yet formed, as you can see. After this one, price kept going down. Price kept going down, as you can see. So you keep selling as long as you don't see manipulation. You maintain the same direction, right? Again here, pay attention to something I'm showing you here. Pay attention there. If with this type of weak rejection, it did not create true sell buy support level. What is that? True sell buy. Look at this candle. It traded lower and rejected this low. We can call it uncertainty FU, but no. Why? Because it didn't create a true sell and buy support level. True sell, buy sell didn't get through sell buy support level, it's like this. We have candle, this candle is selling and close here, and another one traded lower and rejected. You can see these levels, right? They are equal. These levels are equal. This is what we call sell buy support level. Then here you can see this candle traded higher, close here, another one traded higher, then rejected. This is what we call buy sell resistance level. So this is resistance level. So always use that when you are judging manipulation. Exception on pattern like this, where market it traveled all the way higher to grab liquidity and return back. Also, this is a valid manipulation. You can see that because it created a true zone here. I hope you understand what I mean, folks. So we keep having bearish bias and no manipulation is yet formed. So after that, we see another patch forming here. If you cannot see it, I try to show you a zoom here. I try to zoom here and show you what to zoom. This is strong FU with a true sell buy support level, right? Can you see that? So I'm trying to show you here because maybe you are not seeing what is going on here. So now a new FU was formed. Lower time frame confirmation was so great. So it was so good there if you know how to check it. So we start another year candle with bullish movement to take liquidity above all the way into that imbalance for a reversal, or price continues to go higher to take out that FU resting above. What do I mean? So we have got an FU here. So we start another candlestick here, another year candle with a bullish direction because we have got FU. Then quick liquidity is here to target trading into this imbalance. If market has to make a reversal, it will make a reversal here, or it will go to grab what? To take out this liquidity. This high, because every high, every candle has liquidity. There is liquidity here. Even if it is FU, there is liquidity, right? There is liquidity there. Now, hope you can see that. So, price went higher. Look at this move. Price went higher, trading into this, taking this liquidity, trading into this imbalance, then negated, right? However, there is a strong move there. So when I say start with a bullish movement, how many pips do we have here? How many pips do we have here? How many pips do you have here? From here all the way here. This is a strong move, right? From here, this is this candle. I'm trying to show you this candle on weekly. This is the open of this candle. This candle open is here. Look at this move. Around 640 pips before a reversal form for higher time frame manipulation was generated, right? It traveled over 600 pips before it makes the reversal. So if you start here with a bullish move, you are correct because you are a master of direction, right? Then you know you have two possibilities. Market will either trade in this imbalance and reject, or it will go higher to grab this liquidity. So what happened? You trade there, cleaning out these liquidities, and then manipulated it to the downside, creating the high of the year, right? So if you are going to trade, you start here with bullish direction in mind until you see something we are not going to discuss today, right? Now we have seen that. Now 2018 year closed with negation or just until the FU against our previous formed FU. So if you see me marking negation, I'm simply meaning until the FU. that is negating a previous. If I say negation, that means there is a previous manipulation that is being negated. There's nothing special. Negation is just a manipulation against a previous manipulation. So we start a new year with a bearish direction. Next step, we mark our calorie week liquidity because we have got anti-FU. We mark our calorie week liquidity in the last area of liquidity as our final draw on liquidity we are targeting. Those are the steps. Hope you can see that. We start 2019 with a bearish direction towards our liquidity targets, right? So we have a direction. We know we are going down. We are going to have a candlestick open, maybe to trade higher to create a high of the year, and it then goes down to grab liquidity. Hope you can see that. Now, year 2019 dropped the perfect, taking a calorie weak liquidity, the quickest liquidity in this game. Bias is still bearish. We start 2020 here with bearish direction in mind. Why? Because this candle, as I told you, it didn't manipulate. It closed as a normal candle, even if they have a kind of longer wick, but still a normal candle. So we are still bearish. We start next year with a manipulation. But there was, with a bearish move. But there was what? There was opportunity to sell because it went here to create a high. Remember, this is a pullback. There is a pullback here, guys. You have to understand, right? There is a pullback going to form. Every time a candlestick is closing, most of the time you're going to see a pullback. It's not always, but most of the time. So here you can see during the open, during the open of this candle, it went higher. The open is here. It went higher and it started trading all the way down here. So you can trade Euro USD knowing that you are going down. You are not going higher. You are going down, right? Because you may draw a trend line here and you see a trend line was broken and you start thinking that you are going higher, or you see a retro break of structure, maybe on the right time from somewhere here, and you start buying here, thinking you are going higher, but it's a small pullback to go down because you already have a direction in your mind. Now, since there is no manipulation here, we start another year with bearish direction, which is 2020, right? We will do this until today, right? So this move generated over 608 pips of drop. So if you are catching a push, pullback, push, pullback, push, pullback, remember these are weekly candles. There will be so many pips. You can make more than this one if you are able to see directions that are being formed every month. Yeah, here guys, hope you are following carefully. Now look at this. The next candle traded lower, taking out this level and reversed it, right? Hope you can see that. Our cover liquidity was taken, then liquidity is left behind. FU was formed. Why this happened? We are supposed to go down. Maybe look at this level. You can see start bearish, but COVID created a panic and whipsaw. So this was, remember, COVID-19 outbreak was here on December, and year start with kind of whipsaw. Then it was one of the craziest price action. Those who are there, you remember. Those who are there, you remember. And this is the time I was running to trade this time, 2019, 2020. So you remember that. You remember that when you were there, right? So this was a panic, guys, because of COVID-19. But still, there are more opportunity, manipulation. This is manipulation to go higher, manipulation to go down, negation to go higher. What can I say, guys? What can I tell you? You can see that yourself. You can see that. So even if it can happen, remember this is a weekly candle. You can still sell this candle to make money. You can still buy this candle to make money, right? So that's it. It's the power of manipulation, right? Then now price has created a FU to the upside, leaving liquidity behind. What do we expect? So FU was created here, leaving liquidity here. Because this is liquidity because we have a manipulation here. This is the target. Now, this is the last area of liquidity. Last area of liquidity is being ignored, but a new FU is created. Price will break that anti-FU and continue to go higher. That's something you have to expect, guys, because you have to have two things in front of you. Option number one, price will break that anti-FU and continue to go higher. It will break this anti-FU and it continues to go higher. Or price will immediately negate this FU and drops to the last area of liquidity left behind. You understand that? Those are the two options, right? Price will either break this high if the first break this high, meaning if this anti-FU holds, right? If this holds, there is no other room left, and if this has to hold price, if this is strong, then this must be negated. If this is not negated, there is no trade. Because no matter what we are using time frame strength, we have said a movement we see on the same degree of time. This time our degree of time is 12-month time frame. So if we see FU to the upside, which is buying dominance, we need to see another selling dominance manipulating that goes against this one. So if we see FU going up, we need to see another FU or anti-FU that negates this one. This means if we cannot break this high, we need to see this one being created. We need to see a purge. Candlestick purging this high and then reject to go down. Those are the two options: to break the high or to purge. Now, so we start a new year buying with that in mind. So we start buying here because direction is bullish, right? We start buying with that in mind, that we will either take the high and make a reversal or go higher to break the high. But the key is to understand where we are going. We are going higher as of now. We start buying. Remember, this is yearly time frame. You will see that it will be forming in front of your eyes. It doesn't happen in one morning, right? As long as you are informed, you have information. Now you can see what took place. Market trade higher, then negated, right? Purged and negated, right? Try to see that. So this move you have here, you will be buying. Remember, this is a year candle, right? It's a long move, right? So you have to start buying, knowing that at any time a reversal may happen or it may continue. So you have to trade with what? You have to trade vigilantly. You have to be attentive. So year 2021 started bullish and immediately purged the previous year high, negating bullish FU. Now bearish anti-FU was generated. So this one purged and created negation. Negating what? This FU. So if this one is negated, then this becomes liquidity. Then anti-FU was generated. So on what time frame? Weekly. This is the move. This one was formed here. So this week, you would have made some pips on this week, this candlestick week, because you know you are going higher. This is a bullish week. that rejected later, but it was a move over 165 pips. Not bad, as long as you understand what you are doing. What you are doing, right? The key is not to take, you can even take 40 pips or 50 pips in that week. You can catch, for example, one daily candle in that week, one daily candle in a whole week or two. As long as you know you are going higher. The key is to understand direction, and then remember, our job, Candlestick do not lie. Our job is to track footprints of smart money, and we follow them. Right? Now, here we have got the entity FU. What do we do? Potential liquidity to downside. However, the weak liquidity is generated, which is this one. Then we start the year 2022 with a strong sell bias. So we have this liquidity, and we have also this liquidity. This is a potential liquidity, right? If you are to calculate liquidity, this is how to calculate liquidity, right? That was left behind. We have a strong liquidity, manipulation overall was not taken. This one manipulates and negated another liquidity, then potential liquidity, cover weak liquidity. You get the point. Now, have you seen it, guys? So this sale was really massive. Can you see yourself how manipulation mastery is the king of true market direction, guys? You start a new 2020 year, 2022 with bearish in mind. You have a potential liquidity that was left behind, right? Remember, you do not have to hold a trade for a whole year long. You do not have to hold a trade for a whole year. No. I simply want you to become the master of direction. Got it? You got it? I want you to become the master of direction by directional bias and catch daily candle or weekly candle when you have a true bias in mind. This is the key. This is the key. This is the key of this video. To open your eyes to see what others cannot tell you. To show you what others cannot tell you. This is what we are doing in FX Dovini Club, as the Forms Club, right? To see, to tell you, to see what others cannot tell you. Focusing on entry models, understanding direction, manipulation, direction, entry models. You are there. Price cycles. Because here, there is price cycle that was going on. Price can tell you that is going to go down before even this happens. You can start seeing it. There is a way to say that. Right? So I'm just sharing in terms of directional bias, not details. Right? How to read price action. Now, look at this massive sell over 1950 pips. That means 1,950 pips were generated before a reversal was generated around here. As you can see, those pips were generated around here. This was the open, price traded higher, boom, and we fall down, right? So if, for example, try to look at this area, there's a good thing I will see here. You see here, you mark the high, you mark the low, you mark the high, you mark the low, you mark the high, you mark the low, and you see a break of structure here. And you are going to buy because you are thinking price is going to go higher. But someone who understands manipulation, you know, we are creating the high of the year to clean out all of these liquidities. To clean out all of these liquidities. Please guys, like this video. I want you to like this video and share it, right? Share to your friend. Yeah. There is someone who needs this skill, right? Share it. Then big wick but no clear manipulation. Price will either fill the wick or take it. So in manipulation, when you have a big wick, market must come to fill it or take it, right? That's what we call big wick liquidity. We start 2023 looking for sell opportunity to fill the wick or take it, because there is no clear manipulation. Because there is no clear manipulation. Again, the new candle, small sell program was generated, but the price ended up closing bullish. From here, indecision candle doesn't show true direction. The cheat code is to use intermarket analysis to discover what's going on. Underline this, guys, and never forget that. The cheat code is to use intermarket. When you see that there is no direction, I'm recommending you this. If you see that there is no clear direction, the cheat code is to use intermarket analysis to discover what's going on. Then decide on where the next candle is heading, or choose the right pair if you have correlating pairs. For me personally, I'm mostly on Euro USD and GBP USD. And I compare them at the right time alongside with dollar index, right? This is where you need to compare Euro USD and GBP USD, because one of them is going to give you an idea of where market is likely to go. Remember, this is a year candle. Of course, there will be beautiful trade on the weekly, daily, if you go there. But I'm speaking in terms of determining direction. This is the decision candle. This is where you have a crazy job of trying to understand what's going on. However, there was a sell opportunity to fill this week. Sometimes we fill 50%, but we didn't, I guess. Now, this week was a trend on a time frame that you can profit from. So, intermarket analysis. Do intermarket analysis using correction and do the following. Take your time frame and divide it by 2 and try to see. In this case, from 12-month time frame, choose to 6-month time frame. If no clear manipulation, divide again by 2. In this case, from 6-month to 3-month time frame. Just to see where do we have exactly the right manipulation that is going on under the hood. So this is Euro USD and the GBP USD. So this is Euro USD, this is GBP USD. Now, on a 6-month time frame, as you can see here and here, on that time we had until FU on Euro USD, right? And then on the GBP USD, we didn't have any manipulation. This candle on Euro USD was purged, but here on the GBP USD, it was not purged, as you can see. As you can see, it was not purged. It was not purged right here. This was purged. But here, so feel like this. One is going down, another one is going higher. One is going higher, where another one was trying to go down, right? So this is what we call SMT divergence, right? SMT divergence. And it's out of this topic. I'm not going to discuss much about that, right? So now we know manipulation to the upside, high chance we are going to go higher, right? Then another proof, GU failed to create the low. Momentum is going higher. While this one managed to go down, but it ended up rejecting true direction to the upside. Hope you get the cheat code, guys. Now, this blue candle, this candle, you are going to buy to go higher, and here you are going to buy to go higher. So after that, look what happened there. Try to see what happened there. You see that? So after this, Euro USD failed to grab this draw on liquidity, failed to grab the high, right? While GBP USD succeeded to grab the high, but rejected, manipulating to the downside. And see, manipulation downside. While Euro USD didn't even make it there, right? Another sign of going down. Another sign of going down, there will be a certain sell opportunity that's going to come. That's going to come. I know on our time frame, if you bring a bigger chart, there is another block being tested here for a bigger push to the upside. However, our job today is to read the candlesticks, right? Now, look at this. Look at this. Look at this. This is failed to create the high, but GU succeeded. After succeeding and rejected, another sign of going down. So where is the movement to downside? Of course, it starts from here all the way here, right? Of course, this candle closed. There was a beautiful sell around here before. This FU forms. There was also another sell here. Remember, this week, remember we are on a 6 month. This week is a big trend, guys. It's a big trend. Don't ignore that, right? Before a reversal start. Before a reversal start. And I think there was a beautiful setup around here to go higher. I remember that. So FU forms now. FU forms here on the 6 month time frame. Now you can see that. So what is the direction now? We are bullish. As of now, we are bullish on Euro USD and the GBP USD. Now, we are back on Euro USD 12 month. Now that you have seen how to use intermarket analysis to check what is going on and the identification of high probable direction, let's do analysis of the current year, which is 2025. Now, this is the year 2025. We are going to do analysis. We are bullish now as FU was generated. We are bullish here because FU was generated. We are repeating the same process we've been using around there, right? We are bullish now. We are bullish now. We are bullish now as FU was generated. This means if this year closes this way, this means if this year closes bullish, we will stay bullish until this FU is negated. We repeat the same process. Price will be bullish until we see an FU or until the FU forms against this current one. Wow. If you have to ask me where are we going, we are going up. Because I've given you a proof, right? You are going up. What is going to happen? If this year, 2025, crosses bullish, for example, let's say it crosses like this. Assume this candle has closed. Let's take an example. Assume it has closed. Again, two things will happen. Two things will happen. First of all, price will go higher to take what? To take this high. Like this. That is option number one. Option number two, price will go higher to purge this liquidity. To purge this liquidity and then reject. If that happens, this becomes our liquidity, curve our liquidity, and then we go down. Easy. Have you got it? Have you got it, guys? So we are closing the year. We are closing the year. If it closes like this, then without self-negation, I didn't talk about self-negation today. Sorry, guys. If necessary, I create another video about that. If no self-negation, we start a new year with bullish direction. We start a new year with bullish direction. This time we are bullish. So if the cross like this, You have to understand that you are going to go higher like this. So you look for buy opportunity around here and to go higher to take out this high. And after taking this high, after this high is taken, you wait for two things. To take this high or to purge this, to purge, meaning this candle rejecting to go down like this. Purge, go down. Purge, go down, or break. You get it? You get it? Because as of now, this is the liquidity you have. This is the draw liquidity you are looking for to target. Because we have a FU, we want to see another year going up. So if this liquidity holds, we need a purge no matter what, because we cannot say we are going down if we still have this FU. This FU must be negated on the same time frame. If we don't see that, we wait. That's why you see this move was dominating. However, this was not a true manipulation. But see, true manipulation formed here. A true manipulation. We waited that purge to form. This is not a good setup. We are still bearish here to fill this week or take it. But as long as we see this FU forms, we know we are going higher. We need this to be negated. We need this to be negated. And then we see price dropping to the downside. Hope you understand. So this is the close of the year. So what can we do now? So on a 6-month time frame, we see something like a purge. But read here. Pay attention to this. 6-month time frame, the current candle seems to have grabbed the liquidity. But remember, that is still a running, but it is still running. And it has 2 months and some days to close. So this candle seems to have purged liquidity on a 6-month time frame, but it is still running. We still have 2 months and some days to close. You may see it today and tomorrow you see it there going up because it's still running. It has permission to go anywhere. So never ever draw a conclusion on a candlestick that is still running. Anything can happen. You get it? So switch to another time frame again, this time 3 months time frame, at least to see what is likely to happen. Remember, if you look for a sell opportunity here, you are going against the trend because the higher time frame, year candle is bullish. Now a perfect FU was formed here. As you can see here, quick liquidity is here, but remember this is against the overall direction. Remember, year candle is still pushing higher. However, this FU, we can judge this as a short time liquidity. So what tends to happen, look at this, what tends to happen is this SMT divergence between Euro USD and GP USD, where one can grab it and another one fails to do so. Let's bring all of these two charts here. So you have Euro USD 3 months and the GP USD 3 months here. They have created the same pattern because they are positively correlating pairs. So GU may decide to not trade it, to not hold this, to not take this liquidity. However, GPUSD may go down and take it. If GPUSD takes it and USD fails, that we call smart money divergence, right? If one pair fails to grab that kind of liquidity and the buy confirmation was generated, that will be SMT divergence. Those should be your short-term draw on liquidities. Not that the higher time frame is dictating higher prices. Remember, we are bullish as I told you. However, this may happen because we are closing the year, but at the end, we will go higher. Understand that, as you have seen. At the end, we will go higher. So this can be a short-time low that can be taken and the price goes higher, as you have seen. Those are the price behavior to expect when the price is approaching the close of the candle and the open of the new one. This time, end of year candle. We are ending the year candle. So it may create a pullback. For example, what I'm trying to tell you, when a candle is closing, for example here, look at this rejection, there is a pullback here. When a candle is closing, right? That's what I'm trying to tell you. But even if you can see that, it doesn't mean we are going down. No, we are going higher, right? Because overall the action is bullish. That's something you have to remember. As you can see, this is Euro USD on weekly. This is GBP USD on weekly. GBP USD has created perfect equal lows. So this may go down to grab this, and then we start reversing to go higher. Hope you understand. We go to grab this and we start reversing to go higher. So this time, because of this manipulation, your direction on GBP USD is to go down. Your direction in Euro USD is to go down. You don't know which one will grab it. You don't know how much to go, but go down. Look for sell opportunity first of all before you look for buy opportunity. Because the clear direction is bearish based on what? On a 3 months manipulation. You haven't seen the F here. So we need the negation to go higher. So my price is trying to go down. They may clean out this equal lows before any form of negation forms to go higher. So you get the idea. So this is a weekly candle. So I hope you understand what to do when price reaches certain points. We are not going to decide that today because our focus was to determine direction. And I hope this video is changing you guys. So the art of entering as the forms. The art of entering as the forms based on pure is based on a pure calculation of liquidity, time, and price. It's not a random, but rather a true understanding of direction and the identification of true stop loss on raw time frame from 15 minutes to 1 minute, and a clear target through draw on liquidity. Hope you understand. We strive to engage in trading the move we truly understand. Your ability to stay risk off when there's a missing text. Your ability to stay risk off when the chart is not clear is the key to success. For example, when you are doing analysis and you cannot see what is going on and you decided to not trade, that's the key. Hope you understand. Hope you understand. That's the key. Now, guys, there are some people who complain about my Telegram channel. There are so many fake Telegram channel. This is my official Telegram channel, guys. You can look at it. You can check the link in the video description. There. This is my Instagram. This is my Twitter. We all say FX Beethoven as it is written. There is no number, there is no underscore, just as it is written. So make sure you use the correct usernames when you are following us on our channel, our Telegram, and our X. And remember to subscribe. So where are we now? So that's it. This is our social media. FS to win. My personal. If you want to message me, JD_1, as you can see. So make sure you use correct addresses when you are following us, guys. Links are in the video description. So what did you learn? Go in the video description, check the links, go in the comment, tell me what you have seen in this course, in this crash course about the manipulation and time frame strength. Did it change your mind? Did it change the way you approach the chart, guys? It's not about your interest, but it's about giving you direction, how to identify true direction. Right? Is it changing your way of trading? I'd love to hear about you. I would love to hear from you. What's your comment? Like the video, share the video, guys. Let's meet on the Telegram, on my Telegram. Check the link in the description. come to subscribe to my Telegram channel, because I drop some analysis there, and you have to see it. You have to see it, right? So guys, thank you very much. Thank you for being with me. Until next time, guys, good luck and good trading.